Welcome to the exciting world of Forex trading. It might seem intimidating at first, but don't worry, it's easier to grasp than you think. In simple terms, Forex, short for foreign exchange, is the global marketplace where currencies are traded. Imagine it as a giant swap meet where instead of trading stamps or vintage finds, you're buying and selling different currencies. The Forex market is the largest and most liquid financial market in the world, operating 24 hours a day, 5 days a week. Businesses, banks, governments, and individuals participate in this market, making it a dynamic and constantly moving space. But why trade currencies? Well, the value of currencies fluctuates against each other every second. These fluctuations, even if small, offer opportunities for traders to buy a currency at a lower price and sell it at a higher price, making a profit. Think of it like buying a souvenir on vacation and selling it for a higher price back home. The potential to earn profits from these price differences is what attracts millions of traders to the Forex market. Of course, like any other market, Forex trading involves risks, and it's essential to understand the basics before diving in. But with the right knowledge and strategies, anyone can learn to navigate this exciting market and potentially achieve their financial goals. So buckle up and get ready to explore the fascinating world of Forex trading. Before you jump into trading Forex, it's crucial to familiarize yourself with the language of this unique market. Don't worry, it's not as complicated as it sounds. Let's break down some common Forex terms you'll encounter. Currency pairs. In Forex, currencies are traded in pairs. For example, EUR/USD represents the euro against the US dollar. The first currency in the pair is the base currency, and the second is the quote currency. When you trade a currency pair, you're essentially buying one currency and selling the other. Pips. A pip, or point in percentage, is the smallest price move that a currency pair can make. It's the fourth decimal place in most currency pairs. For example, if the EUR/USD moves from 1.1050 to 1.1051, that's a 1 pip movement. Leverage allows you to control a larger trading position with a smaller amount of capital. For instance, with 100-to-1 leverage, you can control $10,000 worth of currency with just $100. While leverage can amplify your profits, it's important to remember that it also magnifies potential losses. Understanding these basic terms is like learning the alphabet of Forex trading. Once you grasp these concepts, you'll be better equipped to understand market movements, analyze trading opportunities, and make informed decisions. Now that you have a basic understanding of what Forex is and some key terms, let's explore how to take your first steps into this exciting market. Don't worry, getting started is easier than you might think. Choosing a Forex broker acts as an intermediary between you and the Forex market, executing your trades and providing access to trading platforms. When choosing a broker, consider factors like regulation, trading fees, customer support, and the trading platform they offer. Setting up an account. Once you've selected a broker, you'll need to open a trading account. This process typically involves providing personal information, verifying your identity, and making an initial deposit. Many brokers offer different account types to suit various trading styles and capital levels. Downloading a trading platform. A trading platform is the software you'll use to access the market, place trades, and monitor your positions. Most brokers offer popular platforms like MetaTrader 4 MT4 or MetaTrader 5 MT5, known for their user-friendly interfaces and advanced trading tools. Knowledge is power in the world of Forex trading. As a budding Forex trader, it's essential to arm yourself with the right resources. This includes educational materials, market analysis tools, and staying updated with the latest news and trends. Many brokers provide a wealth of educational content, from beginner guides to advanced trading strategies. Additionally, there are numerous online courses, webinars, and forums where you can learn from experienced traders. Market analysis tools such as economic calendars and technical analysis software can help you make informed trading decisions. And don't forget to stay updated with global news, as geopolitical events and economic data can have a significant impact on currency prices. By leveraging these resources, you'll be better equipped to navigate the Forex market and make informed trading decisions. So dive in, keep learning, and happy trading.